Hey everyone, and welcome back to the Tesla Stock Podcast. For years, the story of Tesla has been one of unstoppable global growth. But this week, new data from two critical international markets, one brand new and one long established, suggests that growth story is not just stalling, it's collapsing. And it's happening just as Elon Musk is telling us to forget about cars and focus on robots. With the stock trading around the $330 mark, we need to break down the reality of Tesla's car business today. Let's start with the company's long-awaited entry into India, which by all accounts has delivered deeply underwhelming results. Since launching sales in mid-July, Tesla has reportedly received orders for just over 600 cars. To put that in perspective, that's roughly the number of vehicles the company delivered every 4 hours globally during the first half of this year. The company had originally hoped to sell its full annual import quota of 2,500 cars in 2025, but now sources say they plan to ship only 350 to 500 cars to India this year. So what went wrong? It comes down to a harsh reality: price. Due to India's high import tariffs, the entry-level Tesla Model Y is priced at over $68,000. The sweet spot for the Indian EV market, where most sales happen, is around the $25,000 mark. This prices Tesla out of reach for the vast majority of consumers. While the company was banking on its brand power, it seems that's not enough to overcome a massive price disadvantage. Meanwhile, Chinese rival BYD, despite facing the same high tariffs, has managed to carve out a foothold by selling its more affordably priced Lion 7 SUV. This is a tough lesson for Tesla. The brand isn't an unstoppable force, especially when it comes up against the wall of a price-sensitive market. Unfortunately, the bad news for Tesla's international sales doesn't stop in India. A look at the new data from Europe for the month of August shows that the sales rout on the continent is continuing, and in some cases, getting much worse. The numbers are frankly shocking. Registrations of new Tesla cars in France were down 47% compared to last August. In Sweden, they fell more than 84%. In Denmark, they dropped 42%. The Netherlands, down 50%. And it's not just a few markets. This is a widespread trend. Even in places where Tesla saw growth, the story isn't great. In Spain, Tesla sales were up an impressive 161%, but sales for its rival BYD rose by more than 400% as BYD outsold Tesla in the country. Analysts and industry experts point to a perfect storm of problems. First, Tesla has a small, aging lineup and hasn't released a new mass-market model since 2020, while competitors are flooding the market with fresh products. Second, the political backlash against Elon Musk is having a real impact. One recent survey found that over half of potential buyers said Musk's politics were putting them off buying a Tesla. And third, the company's own price cuts from last year have created a thriving second-hand market for used Teslas, which are now cannibalizing sales of new cars. So, with the core business of selling cars facing deep and widespread challenges, from India to Europe, what is the company's response? Well, it appears the response is to de-emphasize the car business entirely. This week, Tesla published its latest master plan, a corporate manifesto that, for the first time, prominently features humanoid robots. Shortly after its release, Elon Musk made a stunning prediction, stating that the Optimus robot initiative will eventually derive about 80% of Tesla's total value. The new plan itself is very concise, stating that Tesla is building the products and services that bring AI into the physical world. This is a classic pivot. When the present is painful, talk about a glorious distant future. But before we get too excited about Master Plan 4, it's worth remembering that the company is still struggling to deliver on major promises from Master Plan 2, which was published all the way back in 2016. That plan called for bringing electric semi-trucks and buses to market at scale and developing a true autonomous vehicle service, all things that have yet to be fully realized. For investors, this creates a critical question. Is this pivot to robots a genuine roadmap to becoming the world's most valuable company? Or is it a grand distraction from the collapsing growth story of the business that is supposed to be paying the bills today? So, to sum it all up, Tesla's highly anticipated entry into the massive Indian market has been a major disappointment so far, highlighting the limits of its brand power. Its sales route in the established European market is getting even worse, with a combination of competition, politics, and cannibalization hitting hard. And in response to this struggling car business, the company is now telling investors that its future isn't really about cars at all, but about humanoid robots that are still years away from generating any revenue. This brings me to my question for you. Do you buy into this pivot? Is the intense new focus on Optimus and AI a brilliant long-term strategy that makes the current car sales slump irrelevant? Or is it a desperate attempt to distract investors from a core business that is in serious trouble, with no clear path back to growth? Let me know what you think in the comments section below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.